Payday loans allow people to access cash quickly, but members of the group Kansans for Payday Loan Reform say rates in some of the stores are too high. Annie Ricker is a pastor at a church in Barryton. She says that a couple of years ago, she and her husband were living paycheck to paycheck. Then her husband lost his job. They had medical expenses and car trouble to deal with.
Felt like we didn't have a lot of other options, so we took a loan to cover what we needed. And then because of the high interest rate, it just snowballed.
Supporters say this is an all too common occurrence. Marilyn Stanley is the executive director at Housing and Credit Counseling Incorporated. She says many of the people her organization works with are struggling with payday or car title loans.
Because they're worried about repaying that loan, they may miss other payments like their utilities or food to feed their family. It could be even missing a rent or mortgage payment.
Currently, the state allows lenders to charge interest rates as high as 391%. I reached out to multiple payday loan companies in the state, but no one responded for our story. Supporters say lawmakers need to cap the number at a much lower rate, so that paying for an emergency doesn't become a long-term economic struggle.
We're not wanting to excuse them from their financial obligation. We're wanting to allow them to access this type of loan, but to do so in a way that does not further cripple them.
The group says reforming laws to allow people to have more time to repay their loans would help the most vulnerable. Reporting in Topeka, I'm Alec Gartner.